Welcome back to Squawk Box. The 10-year Treasury yield hitting its highest level since June 9th and the biggest two-day advance since August. Joining us right now to break down the market move is Joe Terranova, Virtus Investment Partners Chief Market Strategist and, of course, a CNBC contributor. Good morning to you. We could talk about that. We could also talk about which way equities are headed. Where do you want to start, Joe?
Well, good morning, Andrew. I think the conversation surrounding yields is the most interesting one for investors and traders. As you rightly identified, Treasury yields approach levels that they haven't seen since June. I think the question becomes, we've had two experiences in the last several months where yields have risen, and what has happened is there's been a correlation with negative price activity for growth and technology. What does the rising yield scenario do at this point for those growth and technology stocks? I would offer there's a new dynamic that's been introduced, and that's that last week we saw the single biggest weekly inflow into the bond ag fund since 2002. That's the inception of the bond ag fund. So $1.8 billion, Andrew, went in a very defensive mannerism last week. $1 billion of it alone on Friday when we received the news about President Trump's COVID diagnosis. So there clearly was positioning that was very defensive. Does that get unwound? And does that allow for both growth and technology to continue to advance and also to see some of the value, like financials, advance as well?
So you're raising the question, what's the answer? If you're going to position yourself this morning based on what you're talking about right now, are you going to be buying financials? Are you going to be buying tech?
I think a proper blend of both is the right strategy. I would not be moving away from growth. I would not move away from the FANG names on concerns that yields could rise further. We're coming 1 week from today, Andrew. You're going to be talking about JP Morgan. You're going to be talking about Citigroup's earnings as they're released next Tuesday morning. And having exposure to select financials might be the right strategy looking forward. So I like a blend of both growth and value. I don't want to move away from the growth. As it relates to financials themselves in the upcoming earnings season, keep in mind, as we've discussed in prior months, the capital market activity remains incredibly robust, and that will offset the negative impact that continues to hold back financials with deteriorating operating margins. So names like Morgan Stanley, names like Goldman Sachs, they're going to once again benefit in this quarter from an environment of trading that is certainly unique to the experiences of trading revenue over the last several years.
Shepard Smith here. Thanks for watching CNBC on YouTube.